Hi, traders. This is Dr. Greg McLeod from the Elite Traders University and My Market Heat Map. And this is time for another edition of Bulls versus Bears, the weekly Forex forecast. And it's so good to be with you here on a Saturday. And this is when I do my time to actually start planning and setting the tone for the week ahead. I know last week I mentioned that with non-farm payrolls last week, but we did have February that was a shortened month. And so non-farm payrolls actually this Friday. So we're looking forward to actually the release of the jobs report that's going to come out on the 10th, right? The 10th of March. Usually it's the first Friday of each month, but sometimes it gets wonky when there's only 28 days in the previous month. Okay, so and we're looking for a we were looking for a pretty blockbuster number. We have a really big number, almost 571,000 jobs were created for the month of January, right? So it's huge, right? So we're looking at the non-farm payrolls backward looking. So we're looking at February's number, and so that's going to be very, very important. In fact, we're actually looking for a drop to 206,000 jobs as the rate hikes of the Fed start to bite and start, we've seen massive layoffs at a lot of big tech firms, and the layoffs continue as the cost of capital starts going up as the Fed continues to push toward its 5.25% target in order to fight inflation. They raise rates that actually slow down inflation. What does that mean for the average person? It means that, well, guess what? If people aren't buying stuff because they don't have jobs, it lowers demand and lowers inflation, which is, when you really pull the curtain back and see what this actually it looks like, it's really silly monetary policy. That's why you really should learn how to trade. Robert Kiyosaki and a lot of other famous guys out there say that you should have five streams of income, right? And if you only have one stream of income, your job, and then that one stream gets cut off, guess what? You're at the mercy of friends and family and the government. All can be a little bit, but the thing is that you don't have control of your livelihood of your family, your rent, your mortgage, your car note, everything that you have to pay, you no longer can because you no longer have a job because they want to lower inflation. So your job gets cut, or you're called redundant, when companies merge. So if you put your whole trust in a company and they make a decision against you, you are at severe disadvantage. And that's why I encourage people to find another stream of income. My preferred one is trading. You can do it from anywhere in the world. You do it from a laptop. I've done it from Hawaii. I've done it from both the Bahamas, from Jamaica. I've done it from Cabo San Lucas. I've been able to trade all over the world and make money on demand on my terms whenever I want to do it. And if I don't want to do it, I can just roll over and go to sleep and wake up and trade as much as I want. And I have no limit or no ceiling to how much money I can make. Why? Because I have a system that I've been using it for close to 30 years. And also my other stream of income is also teaching and training. Don't get me wrong. It's not a charity. I don't do it for free, but I reveal the secrets of the market that most professionals don't even bother doing so. So that's part of my way of giving back to people and helping you to do it with no money down. If you have a 640 credit score, you can get my course for basically no money down. And then you can also get a prop trading account, even though you have zero in the bank. So make sure that you click the links in the bottom of the description, or you can find out more about it by talking to a member of my team and actually find out how you can actually get a six-figure trading account. I'm talking about $100,000, $200,000 for you to trade and be able to keep 80% of the profits, and also have a sophisticated system, which is not cheap, but you can get it with no down payment if you have a 640 and above credit score. That's using OPM all the way around for you to be able to get a six-figure account, be able to make 10, 20% of that account, pay off that loan, and now you are unplugged from the matrix, unplugged from their system of cycle of inflation and layoffs. You want to get off that train. You want to get out now. If you don't, then Uncle Sam is also giving you a tax refund, and don't blow it on a big screen TV in a vacation. You need to get to flip that money by getting the knowledge that I have to help you get a six-figure account with no money out of pocket, and also you will be able to grow that and expand that exponentially. So if you don't have a 640 credit score, but hey, you've got some money, well then you need to invest that in yourself so you can multiply your gains. Anyway, that's my that's my rant, because they're hiking interest rates, guys, and the goal is to reduce the number of jobs created, so there's less people buying stuff and prices go down. Now, which people get to keep their jobs and which ones get cut, it's all cyclical, right? I remember in the 80s, it was, my dad was it was a meat cutter, and they brought in cheap labor, and they shut the doors and they broke all the contracts, and he was unemployed. In the 80s, after the end of the Cold War, it was the aerospace industry and the defense industry. If you work for Raytheon, you work for all these big companies, and you've been making bombs and missiles and radar systems. And then all of a sudden, all those guys were out of a job, right? When they raise interest rates. So this is a cycle that's been going on for years and years and years. You may be new, maybe you're 20, 30 years old, you go, I don't know what's going on. This has been going on for a really long time, and you need to head it off before you become the next victim of the next job layoff. Now it's high tech. Before, hey, you work for Google, you work for Apple, you work for Roku, you work for Twitter. Oh, wow, you're such a great guy. You're part of industry and part of the technology. And when the interest rates go up, all those guys got cut and laid off, right? And what's the next one that's coming? So you want to learn how to trade so you can unplug. Most companies have trading desks. So when revenues drop, they can actually have a trading desk actually makes money, right, for them while their core business is not making any money. Dell Computer has a trading desk. Google has a trading desk. Even your endowments, your colleges, universities, Harvard, Yale, they have a trading desk. UT, where my daughter goes to school, they have an oil trading desk, because the amount of money they get from tuition is not enough. They have an endowment fund, and the endowment fund is just a bunch of traders at a desk making money, flipping the money they receive so they can pay their bills. Okay, so shouldn't you have a trading desk too? Okay, I know, I'm ranting and raving here, but non-farm payroll, they expect the unemployment rate to remain at 3.4%. And looking for 517,000 jobs was the previous number, and looking for a drop to 206. And so if they do cut the amount of jobs that were created for the month of February to that number, that's going to probably make the Fed not pause interest rates. And we can see a risk-on rally this week. We can see a rally in the S&P 500, which we saw on Friday, which I forecasted and I told you about last week. I said, look, everything's poised to reverse. This is a 72-year cycle. It's been going on for 72 years. Okay. And if you don't learn about history, you are going to be doomed to repeat it, because you don't know why it's going. You're thinking, oh wow, we're a downtrend, and oh my goodness, they want you to sell so they can buy it back. So you're going to see your Teslas and all your high beta stocks shoot up this week, because normally there's seasonality in the markets. If you get a book by Jake Bernstein, he writes about seasonalities. Also Jeff Hirsch and the Stock Market Almanac writes about seasonalities. That this has been going on for 72 years, that the markets rally in March. In February, usually the worst. And I'll show you a chart. And then March and April are super strong, and then sell in May and go away. And then we start this whole cycle all over again. Okay. And we can play that with currencies very easily. we can use different currencies. I'm going to show you that. Okay, so let me, I got giving you a lot of background here, but let me go ahead and share my screen. Share my screen. We're going to share screen with some sound. We're going to share screen number one. We're going to share my screen, right? Yeah, right. All right. Cool. All right. So so here's the screen here. Oh, we're going to use my top secret weapon. My number one tool for trading the market is my market heat map. It's an arrangement of currency pairs by percentage change. It shows you what's hopping, what's popping, what's dropping, and what's not in the market. And it's a really cool tool. In fact, I'm going to play a little video for you.
$6.6 trillion are made every day on the foreign exchange market. And although you love a piece of the action, a lack of knowledge and experience has you wasting more time than you make. What if trading like a pro and making smart decisions could be easy? No scanning endless charts or analyzing confusing reports. No time-consuming research or unreliable social media hot trading tips. Quit the guessing game, avoid risk, and get the answers you need to make huge profits starting right now with My Market Heat Map, a trade scanner that provides a complete overview of 28 Forex currency pairs, plus gold, silver, oil, commodities, crypto, and other major global market indices. Quickly and efficiently identifying profitable market trends and lucrative trade opportunities has never been easier. Simply buy in green, sell in red, and stay away from gray. Earn more, lose less. For a limited time, get a 7-day trial of My Market Heat Map for only.
Okay, there you go. This My Market Heat Map. It's a range of currency pairs by percentage change. Let's dump right into it. It's not just a scanner, but it's also a full featured. It's I call it the poor man's Bloomberg. I'm not a poor man, but Bloomberg terminal will cost you about $25,000 a year. But this does cost a lot less than a Bloomberg terminal and provides you with a lot of information here. So let's go ahead. We're going to play fun with flags. Now, I look at the economic calendar is the first thing I look at when I'm trading currencies, okay? Because the economic news is one of the biggest drivers of currencies, like the wind in the sail of all these little boats, right? And when the news hits the water, the economic announcement hits the water, it creates a ripple. And that ripple causes all the little boats to move, right? And that creates volatility. It creates the momentum behind the currency. So we just look at the flags, right? Fun with flags. And we're actually going to go to next week. And now we're into March, right? And then we're looking at, oh, wow, look, we had the RBA rate announcement already. Another rate announcement from the Reserve Bank of Australia. Got the Australian flag here. I can actually zoom this in, make this a little bit bigger. And when a country raises interest, a central bank, the Reserve Bank of Australia is the central bank. They set monetary policy for the Australian nation. And this whole inflation thing is a global phenomenon. It's not just the United States, but every country is fighting inflation. Like we had supply chain disruptions, we had COVID, a number of things. People are also pent-up demand from being locked up in COVID. And so that's creating, and then we've had all kinds of little, weird little things like we've had bird flu, and we had different things that have caused supply disruptions. And so every central bank, the only tool they have is interest rates in order to fight inflation. And so the RBA is also looking to raise interest rates as well. Usually Australia and we're normalizing interest rates because they've been low for almost a decade, right? A couple of decades. So normal interest rates. I mean, I remember the Australian dollar, and I remember the interest rates when I worked for the brokerage. They were in the 6-7% range. New Zealand was like 7.5%. And we're at like maybe 4. So we've got so we're basically normalizing interest rates and getting back to normal. But no one likes paying a lot of interest. It's like, really? It's not something that we all want to do. In fact, the cash rate's 3.35. They're looking at raising to 3.6%, right? And a hike, and they may even surprise and hike a little bit more. Maybe they hike up to 4, right? But we're still historically very low for the Reserve Bank of Australia. Now, interest rates are one of the main drivers of currencies. So when a central bank raises interest rates, it usually causes the currency to go up in value. They give it like a term of like 2 banks. Maybe you've got Bank A, and Bank A has 2%, and Bank B has 4%. Well, where are you going to put your money, right? Now, if you want to place your money at a bank that's going to pay you more interest, right? So you'll see money move from the low interest bank to the high interest bank. So you think of the currencies as banks. Well, a low interest currencies like the Japanese yen, the yen, the central bank has interest rates at like negative 1.0 or something like that. So they have negative interest rates there, or negative 0.1. So negative interest rates. So you could basically borrow money for free, get paid. Is that how that works? And then you buy Australian dollar where you're going to get 3 with a differential. You're getting almost like, you're getting 3 times your money by trading yen for Australian dollar. This is called the carry trade. And you really didn't have the carry trade so much back in the day because the global financial crisis and then COVID. So interest rates were negative or low for so long. No one just traded currencies for interest rates for swap, right? They call it the swap rate. So now this is becoming very interesting where you can borrow yen very cheap and then buy Australian dollars and you could, or borrow yen and buy US dollars. This think of what country has a higher interest rate, and they pay interest not like the bank. You put it in the bank and you get it every month or every quarter or something like that. They give it to you at 5:01 p.m. Eastern time. That's the interest rate cutoff. So maybe depending on what size position you have, it's can be a few cents or a buck or so. But if you're trading in size, like sometimes I'll put 10 standard, 20 standard in at 445, and all I have to do is hold it from 445 to 501 to get the interest. Or I can buy it 449. Usually the spreads are really wide, so I really don't want to be in the market then. Usually I get in the market a little earlier. Hold it, get that interest, and it's triple on Wednesdays, guys. Triple swap on Wednesdays. So, I mean, this is like, when you had the UK had like, 4 or 5% interest, and you buy pound yen, you go long pound yen, and then you would keep that interest on 10 standard lots. You make $625 in swap in a minute. Now, usually the price drops, right? But if you got, you hold it, and then the price will come back. But that you get just automatic interest just for holding. So it's almost like a dividend capturing. If you're familiar with dividend capturing, where if you buy a stock on the X date, and even though you sell it because you bought it on the X dividend date, they'll pay you the dividend. They call it dividend capturing. So people will buy hundreds of thousands of dollars of a stock on the X dividend date, and then they sell it. They hold it for a day and they sell it, and then when they pay the dividend out with in several days or weeks later, they wind up getting the dividend anyway, even though they don't own the stock anymore, right? So that's another freebie, another nugget of knowledge that you can learn from me, being in the market for almost 30 years, working for one of the largest Forex dealers in the world. You can spend time with me in Las Vegas at the Las Vegas Forex Trading Mastermind. And I would love to be able to meet you in person and be able to share my wisdom, my knowledge, share my expertise with you in a one-on-one group setting with just when you're just a few days left before our prices actually go up. We're nearly sold out. We've got all of our mentorship people that we've got seats set aside for mentorship, and we have seats set aside for people who are not familiar with the pip and run strategy but would like to learn it in person. This is your opportunity to be able to join me in beautiful Las Vegas. We're counting down to our big event on April 2nd, 3rd, 4th, and 5th. And we're going to learn all kinds of great strategies. We're going to be trading live. We're also going to be trading the London session overnight, and we're going to be doing that. And there's also we're going to have Brazilian steakhouse dinner. We're going to start off Top Golf, start off a little fun. There's going to be some early bird trading opportunities. We're also going to have a hypnotherapist to work on Trader's Mind. It's going to be fantastic. You don't want to miss out. If you can't make it for some reason, we do have a streaming ticket, an online ticket where you can get all 3 days to the event. And we'll even put the VIP, the London session trading in there as well. And you can join that, and it'll be a really powerful event. So I really look forward to seeing you in Las Vegas. It's my first live event after COVID. So don't be there or be square. We will have recordings, but they will be, sale as part of a new course that we're creating. We're also going to be teaching the pip and run strategy there. Okay. So we're going to be there live, and we're going to be doing that. And we're going to be recording for our new upcoming mentorship videos product. So make sure that you're part of that. And we're going to be hacking the trader's mind. That's really key. A lot of times we know what to do, but we don't do it because we do a lot of self-sabotage. There's all kinds of scripts running in our mind, things that were installed since childhood that we have no control over. Dr. Dispenza talks about that. So bring you into a new environment, away from your home, away from the people that you constantly see, and put you in an environment with other traders, other professionals, in a beautiful environment, a mansion mastermind, beautiful mansion with a pool and wonderful amenities. We're gonna have catered food. We have a very luxurious elite experience, and but that's going to create put you in a new mindset, so we can create a new trader's mind for you to take back with you. So this is something that you take to Vegas that you won't leave in Vegas that you'll take. So make sure you get your ticket. Again, we are nearly sold out, and I'm very not amazed, but I'm very happy to see the response. Okay, so again, you can benefit from my years of experience. Meet me in person, and I'd love to see you there. That's the Las Vegas Forex Mastermind. Be there, be square, don't miss out. Okay, so let's get to we talked about the RBA rate decision and the interest rates. Big one. So Australian dollar is going to be in play. You want to be trading the Australian dollar. So, no, I want to trade dollar Swiss because I think it's my favorite pair. It's like, okay, fine, go ahead and do that. But this is where the action is. So if your dollar Swiss does not move during this time, you'll know why. Okay. Wednesday, March 8th. Tuesday, there's nothing going on. So usually when there's no big news going on, you can that's a really good scalping time, because without the news, you're going to find that currencies will trade between ranges and just oscillate back and forth, and really good scalping opportunities. You're not going to see many breakouts, but you get to Wednesday. Now you look at the maple leaf. It's Canada during the 10 a.m. U.S. news cycle, or North American news cycle. We have the Bank of Canada rate statement and the Bank of Canada interest rate decision. And that's going to be very cool indeed. With the Bank of Canada, we could see, they might continue to hike rates. They're fighting inflation too. And because they are fighting inflation, they might also continue to raise interest rates. which could cause the Canadian dollar to actually rise, and that would be something to look at. In fact, they're currently at 4.5%, and they're trying to say that that they may keep rates unchanged at 4.5%. So that could be something interesting as well. But earlier that day, we do have, I don't see it, is ADP non-farm employment change. Previous number was 106,000. They're looking for a rate hike to 195,000, which could be beneficial for the US dollar. It could cause Jerome Powell and the Fed to hike interest rates. ADP usually is a precursor or a foreshadowing of what will happen with non-farm payroll. Usually that's on a Thursday, but they moved it to, I guess, Wednesday. Interesting stuff, right? So again, we have Fed Chair Powell is also going to testify that day as well on Wednesday. So we've done some very interesting things going on Wednesday, March 8th. We do have Japanese gross domestic product quarter on quarter. I really ignore Japanese data. Remember, Japan is an export nation, and they're at like 200% debt to GDP, which means that they cannot allow their currency to increase very much because of the because they depend on a weak yen in order to export goods. And so any hike or raise any increase in the value of the Japanese yen is going to negatively affect their economy. So they try to keep it artificially low, even though this is the end of their fiscal year is March 31st, and usually see some migration. You'll see what we call yen repatriation, where you'll see just a seasonal bump where the yen spikes so they can move money back to Japan, put it on their books for the end of the year, and then they start their new year April 1st. Okay, so you might see a little bit of a bump toward the end of March in the yen. But so be careful out there with the yen pairs, because the seasonalities may kick in where we have the yen actually go up in value. Friday, March 10th, we have the press conference with Japan, but we have UK at 2 a.m. UK production month on month, and gross domestic product month on month as well. And so the pound will be in play at 2 a.m. So, even looking in the day before, because like I said, these big announcements and moving trillions of dollars in currency, they build positions first. And so you might see some movement into the yen, to the pound going into this 2 a.m. on Friday. And then we go into average hourly wages. We also look at NFP is coming up as well. And I don't think these guys even have it here. Yeah, but we have unemployment rates. It looks like it'll forecasted to hold steady at 3.4%. And the employment change is expected to drop from 517 to 206. Not sure if we're going to see a revision of that 517 number. Hourly wages are expected to remain unchanged at 0.3%. And we also have GDP out of the UK as well. Yeah, so we're going to have the pound in play, the Canadian dollar in play, the US dollar in play. And anytime we have US news, we're going to be looking at the euro. Okay, so even though we don't see any European data there, we have US data, we have the US employment change. That's going to be a euro, or you can use dollar Swiss too. Okay. All right, let's go right to the technicals. I know that you're like saying, Greg, what are they? Show me some charts. All right, I will show you some charts. Get rid of this mess, this spaghetti here. Just looking at this stock, my daughter was asking me about it a while ago. I was looking at it and going, I said, you probably don't want to sell it yet. And she asked me on this day, it was like $4.09, and it rallied to $5.67. but we were below the 200 and lower highs and lower lows. Been nice because this thing went all the way down to 78 cents. So she was right. That's my daughter. That's Kara. She's over at Prairie View. Go Panthers. Okay, so let's start. I always start with the dollar index. US dollar index is a basket of currency pairs versus the US dollar stock ticker symbol, or the ticker symbol is DXY. It's not. And then we have, this is a daily chart, and we can see that we crashed precipitously from the high that we had back in September of 114, got down to a low of 180, rallied to the 105 whole number round number, and we can see that that was a 38% retracement move. We're on the other side of trend now. We are on the other side of the rising trend line. We're also on the other side of the 200 simple moving average, and so we're making these lower highs and lower lows for the structure people. Nice bit of buildup right there at the 105 area. And so it looks like we could see, lower highs and lower lows, a move back down to the 156 area. And this was in line with, again, a 72-year cycle pattern, right? And so many of you guys at 72 years, I'm looking at my cell phone. Yeah, you're looking at your cell phone, you're trading like a pirate. Arg, you're looking at one time frame. You're looking at a very small fragment of time. You're looking, and so it's so when you miss these huge cycle patterns, and so you get basically hit upside the head by the cycle. And let me show you the cycle. It's pretty simple, and if you understand, again, this is so we had January. Again, this is actually from 2012. But it was, so I said 63 years is only 73-year seasonal pattern, and really like 74-year seasonal pattern. So we have January is usually up, February's down. You guys remember February? It sucked, right? But look, March is going to be so much better than February, based on this. I know people say, well, past performance, not indication of future results, and like blah, 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 right? Anyway, you go to a doctor. If you go to a doctor, chances are you're going to him because he did perform well in the past. If he didn't, you sure didn't want to go to him. And chances are, if you got into an airplane, the pilot, he landed a plane successfully maybe an hour before you got on the plane, and that performance allows you to trust him to fly you to your destination because that was past performance. Okay. So past performance is a really good indicator of future results, right? So we really need to pay attention to it, and that's why cycles are very important. So past performance in March, 1% growth in March on the Dow Jones, and then April looks even better. So you've got this huge, because why? What comes after April? Sell and may and go away. So we could see, risk on currencies is what we're looking at. These are currencies that move in the same direction as the S&P 500, the NASDAQ, and the Dow Jones Industrial Average. Currencies like the Australian dollar, the New Zealand dollar, the Canadian dollar, okay, they usually move in an up move in the same direction as the NASDAQ. So if you don't trade NASDAQ, you can always trade Aussie dollar, Aussie yen as a proxy, right? You can trade euro as a proxy, pound versus US dollar as a proxy. They move together. So we're going to see usually bullishness here. Now, guess what? If these are going up, US dollar is usually going down because you sell dollars to buy stock. Okay. So the stock market and the US dollar rarely go together, go in the same direction. They're usually, we say, diametrically opposed. Okay. There you go. I want to use that 50-cent word, diametrically opposing, right? So given this, we got this bearish move, this kind of round, and then we see we can draw a trend line across the lows, and we look for a break of that low, this 104, 104.08 low. We break that, then that is going to be the signal for all you risk takers, there's you Tesla people and everyone else, get happy on a break below here. That's going to signal a whole slew of risk on stuff, especially if that non-farm payroll comes out worse than expected. If we come out like at 110 or 120, it's going to show that the Fed is over tightened and they need to stop their stuff, right? And maybe if they stop and leave the economy alone, we'll go into a recession. Okay, anyway, I don't have very sharp views about that, but okay, anyway, let's go ahead. So looking at the dollar, bulls versus bears, I am bearish on the US dollar. Short-term bearish though. I think that short-term meaning 2 months. But then the bear, I look for a bear move back toward 114, but not until May. So I think we can work while the sun still make hay while the sun is still shining. The sun is coming out. EURUSD is called the anti-dollar, and that way we will look at some of our technical moves. Now you can see almost like complete opposite, right? Where we went up, now we went down, right? And so now we're looking at, there are a lot of people who are short. They're saying lower highs and lower lows. Like, I think we had another shot to the upside. Maybe back up to the 110 to 41 area. All y'all who are looking at some type of funded trading, prop trading thing, if you can hold it, just get long for the stop and let it go, and you'll get your 10%. You're done. Okay, there you go. So there you go. There's your support. Came down to a Fibonacci area. Just kind of hang out. Didn't quite get to the 38% retracement, but we have support coming in just above it, and so we have a higher. Basically, we have a higher low. We have a low and a higher low. See, buyers stepped in before this could even come down here, so this is extremely bullish. This is extremely bullish because we're looking higher highs, higher lows. Then we had lower. We did not get a lower low, and so the bears tried push, and then they got rejected. And so now the bears have control, and so their goal is to get prices back. They have the ball now, right? Then they're running down the court, right? Because the bears were rejected. They could not get back to the low. They could not get back to the fib. They couldn't get back to the 200. So they've this collapse of the failure swing. We have a failure swing. We have a swing, and then we have a higher low. The bears failed to make the same low, failed to make a lower low. They're in full retreat right here. Just looking at the daily, right? And so now let's go ahead and drill it down to a 4-hour. You always want to look at multiple time frames. You can see that we got some higher lows here, spike low, and then price breaking up there. As long as we can stay above 105.29, 105.64, we've got a and if we retest the trend line, there'll be a nice entry, right? Because it looks like it's trying to make a bearish head and shoulders there, and so let the head and shoulders people try. But when it drops down to here, maybe get a drop. Maybe a drop on Monday, Mag Monday, and then turn around Tuesday. I look for a break above the high of that shoulder is a failure of the head and shoulder, and the failure is going to tell us a whole lot about, this is right now. This is like, hey, this is a head and shoulders, guys. It's like, okay, go ahead, do your head and shoulders. If you can't take it down, guess what? I'll be waiting for you for buy stop above the high, and I'm going to crush it, looking for a move back up here, right? However, if they do their thing and break it, then we can go much lower. Okay. All right, so that's a 4-hour chart, and we can drop it down to 1-hour chart. And I'm looking for a break above the shoulder to actually trigger a lead, take it down. But then I'm looking for a rebound. So bulls versus bears, I am short time frame, I'm bearish, but medium to long term, I'm bullish. And I'm bullish above. If I like to see a retest of the trend line at 105, let them try to do their head and shoulder thing. And if it fails, the failure is going to be at 106.35 and above. And when they fail, then I want to be in it to win it. Okay, that's that is that. Let's go ahead and go to the British pound. GBPUSD is our next currency. And move drawings. I actually want to go out a little bit farther, out to a weekly. And you can see that spike low is very, very bullish. The bears were larger than charge, and then rejected, boom. And now we rebounded from that area. And so I would draw maybe a downward trend line across the top of this weekly. So we've got this, looks like it wants to do a little head and shoulders there, but then I look for a break above 124.72. There's a 200 at 128. That's pretty good number of pips there on a weekly. Daily, walking down, you can see that it's narrowing. We went from big wide moves, narrowing. We can draw a trend line across the tops here. You can see the 200 is acting as support on the daily. And so we've got lots of support. Also this old low at 118.53 is holding up as well. So we've got lots of defense in this area. And so we just look for, we can enter with a small stop. And so our risk to reward is very small. Looking at the old high as a possible first target. We also have the makings of an inverted head and shoulders here on the daily chart. If you kind of, we've got something like that. And the way that the measuring objectives, we can set that with the head and shoulders. If this was our neckline, and this is our shoulder, head, shoulder, and this is our neckline, well, then we can measure from the neckline to the wick of the head, and then we can clone that like a sheep, and then project that from the neckline. We would project it from the neckline. That's going to give us a very big target, and I'm not, not going to say that we're going to hit there anytime soon, right? But I would, maybe even look at maybe half that or a third of that. 25% of that is pretty good to the 130s, right? If we can clear all this congestion out, we'll have lots of gapping airspace right between 126.38 and 130.29. Okay. And once we get out of this congestion zone, Let's drop it down to a 4-hour chart or dealer charts, and we can see what's going on there. We can see multiple bottoms here, you know, in this 118.80 to 119 area. And so lots of support there. Price has lots of, you know, once we break some of this, we've got lots of smooth sailing to the north side. So again, I'm looking at bulls versus bears of the pound dollar. I'm looking to stay bullish as long as we can hold above 118.80. I'm looking for targets to the 122 to 125 area over the next couple of months, or next maybe no this month in March and April. Okay, and let's look at our next currency we want to take a look at. We want to take a look at the Australian dollar. We do have the RBA rate announcement coming up, and remember that interest rates are one of the chief drivers of currencies. And so when you have a central bank that's actively hiking interest rates, you usually see a movement. We look at this, very nice. And this is a 4-hour, looking at a double bottom on the 4-hour. But let's go back up and back it out to like a monthly chart. And we can see that we had some really sharp moves here. A low that we put in 2020. This is our pandemic low. And there was an attempt to try to hit that pandemic low again, but it was quickly attacked by buyers stepping in at the 61.65 area, some 1,000 pips away from that low. So we have a higher low. So the structured people are happy. Higher highs, higher lows. We have a low, a lower high, a higher low. And so the bulls are going to try to take out this high 80.22. We have a Harami, monthly Harami right there. We hold in there in that range. This looks pretty bullish. This is part of a maybe a morning star pattern. Another higher low. If we close here, kind of can't really draw a trend line there until we get another closed candle. Won't get another closed candle until April though. Let me get rid of all these other. I must remove all drawings, right? Let me start again, right? We have a higher low, which is that's bullish. You want to stack all your evidence of. We have another higher low we can probably draw. We also have some lower highs, so it means it's indecision. But once we break that line, we're gonna have pretty smooth sailing till we get back here. We just have some congestion here. And could be the RBA rate announcement. It's going to be the catalyst that's going to spark this for a movement to the upside, right? As long as we can stay above 66.91, then we are relatively bullish. Bulls versus bears. I am bullish on this, but let's walk it down a bit. We're on the monthly chart. Let's get down from our 50,000 foot view and get down maybe to our 20,000 foot view. We can see a low, a possibly higher low. Would like to see some type of a break of this trend line. We have a color change from red to green. Like to see it continue with a break above 67.72, and that would lead us into the old high of 71.46, which is what we're looking for. In fact, I'm not making any recommendation, but I am long Aussie dollar. And I know it's like, Greg, you're this over the weekend. It's like, I know. But this I'm looking at all the support, all this attempt. There was like day after day after day after day of trying to jackhammer to break through the 66.98 area, and we are not. But we are sandwiched between the 200 moving average, a rising trend line, and falling trend line. So we've got a lot of little price compression. And usually when we get a compression zone like that, where a price just compressed, we usually see some type of resolution, some type of breakout. So we have some type of price consolidation, and so we can see this. This could lead to a breakout reversal. Like Tony Crable talks about his NR7 or NR4, 1, 2, 3, 4, 5 5 candles of narrow range in R5, and that 6th one gives us some type of a breakout. So anytime we have lots of tight consolidation usually leads to some type of breakout. So it's like a flag pattern. Well, let's move on down to a 4-hour chart and see what we can see. We can see small body doji candles, and then we have our double bottom, right? A failure to make a new low. Buyer stepped in, and looks like we're going to take off, like to buy any type of pullback on this bulls versus bears, Australian dollar. I am bullish. Okay. We do have some Canadian news coming up as well, Bank of Canada. And let's go ahead and take a look at that, USDCAD. Right, we'll take a quick look at that. To our neighbors to the north, they export a lot of lumber and oil, one of the largest suppliers of oil to the United States. I was watching some commercial. There was a lot of really cool things that were invented in Canada that they don't get credit for. But here we go. So here we go. We've got this 4-hour chart. This is a daily chart moving out. I'm gonna move out to the monthly 50,000 foot view, and you got this bearish harami right there. We have a bullish candle, but that small body candle. It's like the harami means pregnant, so it's a mommy with a baby. And this is a red baby. This is a bear baby. So this thing could turn into a bear. She'll give birth to a bear. We see a reversal. It's a reversal candlestick pattern because it's part of an evening star. It's one half of an evening star, and we can see that we have 2 highs, a double top. We have lower low. We have a lower high, and so chances are we're looking for a same low or lower low, right? Because whoever's in control, they want to make lower lows. Bears want to make lower lows. Bulls want to make higher highs. The bulls have failed to make a higher high. So they kick the ball over to the bear side. Now the bears gonna have their try, and their goal is they're trying to make a lower low, right? So that's what we're looking at there. 39.95 on a monthly chart. Let's drill on down to the daily, and we can see the daily chart. Lower swing highs, lower swing lows. Small body candles, kind of hard to read. Weekly looks pretty bearish too. We have a harami there as well with a little wick on top of that. Oh, I went back in time. I thought it looks the same, right? Let's go down to a 4-hour. That's what we're gonna do. 4-hour chart. It's real janky there. I mean, you could have traded this either way, up or down, while you're in this range until we find some type of resolution to this consolidation. We're probably looking for some type of a breakout coming south out of here, right? We might not get into non-farm payroll. We might see something with the Bank of Canada, giving us some clues, raising interest rates, 4.5%, not too bad, and that could take, we could possibly see prices continue to drop, but it'll be a dollar. Usually, it's a dollar weakness story based on seasonalities, but look for certain levels, certain floors, and ceilings and floors to give away. Just like Pong, or breakout. We're looking for these areas to break out, and then we look for the next levels to be played. Okay, so we are GBPUSD. I believe we looked at that already. Yes, we did. We looked at it. Looks pretty bullish there. And we were looking at maybe the yen, the dollar yen USDJPY, because we do have some yen news. I don't really paying too much attention to it, but we've come up in this zone of congestion. And you know, the dollar may do a little bit of a pullback. It will allow the Japanese to repatriate their capital back to Japan. They might do it through the dollar. And we can maybe see a pullback. We have seen a pullback from the highs of 37.19 or 37.11. And we probably see a pullback maybe down to 34.79. You know, we might see a full-on blowout to the 38% retracement at 33.38. So we might get, you know, quite a bit of a drop. I mean, when this thing drops, it's been doing it in huge just large moves, right? Once it gets going, right? So we got a move like that. Like for instance, if we took the move from here to here, you know, we're looking at, you know, a move of 647 pips in just 6 bars. So, you know, just a day of movement. You know, so if we get something similar like that, you know, to the 30% retracement, we're looking at maybe 274 pips of movement there, right? They might start, you know, the Japanese traders, sometimes can be a little impatient, where they're not going to go up in little increments. I mean, it's just long. It's like, let's do this thing, right? And it's, you know, it's been programmed that way. It's like when about 80% of what's going on in the Japanese market is by AI, by computers, and they really trade just like the people they replaced. Because when you go back before the computers, they were always known as traders who just took these big block positions. They went all in and pushed things in one direction or not. So we can see a pretty sizable drop here very quickly. Dollar yen, you know, be careful though. You know, it's maybe not for a faint of heart. You might want to reduce your position size. You know, because it's like wasabi. Anything you put yen on anything, yen is like having, you ever had wasabi, that green stuff at sushi bar, you know? And I remember hearing someone got tricked. They told me it was guacamole. They put a big pile of it on a chip and then poof, you know, your whole sinuses explode, right? So that's how the yen, attaching the yen to a currency pair like Aussie yen, pound yen, they call that the dragon. So, you know, you take maybe something that's a little calm, like a pound dollar, kind of easy, you put yen at the end of it, it's just kind of wild, right? So we can see a wild ride with dollar yen as well. So you want to be careful. You can make money really, really fast with it, but you also can lose money very, very fast with it too. So be careful out there with it. Okay, let's take a look at some other stuff, other than currencies. But if you have one of these CFD accounts, you can trade some of these indices as well. But if you're trading on the, you know, you're trading the Australian yen or Aussie yen, it's just like, it's like a synthetic S&P 500. So, but look at that. And remember, I told you, I said, guys, that it's, you know, we got the trend line break. I said, this thing is going to, and, you know, I forgot to buy, you know, I was so busy on Friday that I was going to buy the S&P index, and I just got busy. We're really, you know, planning this really cool Las Vegas event, and I have a team, you know, I've got Hugh, I've got Andy, I've got Michelle, I've got a lot of people helping me put this together. I'm really excited about that. So let's go to the monthly chart. S&P 500, you know, just walking it down, and you can see this drop move down here and this rally and rebound. It was definitely, look at that trend line break. It's pretty, very pretty. Go to a weekly, or we went to a weekly. Let's go down to a 4-hour. Yeah, and we're just getting started, guys. This is just getting started. So if you miss it, maybe wait for a pullback. You know, don't get FOMO. Look for a dip. I look for 41.58 as a target. One target two. I'm looking for the old high 43.20 to come into play. This is traditionally the strongest season for the market. And you can go back, maybe even back here. This is March of 2022, right? And look, we rocketed all the way up to, to the end of March. And then from the end of March, we kind of like dropped, right? Like kind of dropped. It was selling May and go, like sell into March and go away, right? But this is a seasonal pattern. You can go back in time. You can go back and you can see. And why do they teach this in school? That's why I have Elite Traders University, guys, to teach you, right? Because they're not going to tell you this stuff. Your stockbroker is not going to tell you this stuff. Look, this is March 2021, right? And look, we went up. 18 pull back to the 24th, and then up all April, right? So 2021, the March-April effect. Again, people are not talking about that, right? They want you to sell so they can buy it cheaply from you. That's the whole idea, right? Okay, well, this is kind of different because we had the pandemic, right? But look what happened at the bottom, though. This is March 24th, and we went up from there, right? Okay, back it up. Let's go back to 2019, right? And just scroll back and look at history. Past performance is not an indication of future. Oh, you hogwash. This stuff, it repeats. And when it does repeat, when everyone else forgets that it does repeat, that's when you step in and you make your money, right? I don't know what happened here. Oh, March. Oh, look at that. We went, I don't know how we went from October to March. But you can see this is April and we rallied. Yeah, that was kind of weird. And there's a dinosaur here. This is the very beginning. Okay. I don't know what the dinosaur means, but anyway. Let's go ahead and take a look at the NAS 100. And let's see who else. Maybe someone for a little bit more history. Right. We go back down to we can go to a daily, weekly. Let's go to a monthly. Oh, I don't think we have anything. Really? Oh, there we go. All right, so monthly. And you can see we're sitting right on a 38% retracement, pullback. He's like, oh, how do you know 38% retracement? I mean, it's like, there you go. Oh, did I call it? How do you know, Greg? Like, oh, just take a high to a low, and now we're here. All right. Go to a daily chart. Multiple bottoms at the 10,552 area. Double top pullback, and then we'll look for retest of 12,793. Maybe a breakout, looking to a high of 13,639. Yeah, we that double bottom there. So I mean, I'd look for a pushback to 16,767. Everybody who laid off people, well, their stocks usually go up because guess what? They don't have to pay those people anymore. That's free revenue. So their profit margins have gone up. Let's look for. I know it's sad, but learn how to trade, and you won't have to endure that. 4 hours. Here's 4-hour chart. Yeah. Nice trend line break. Rally. Green. We went from red to green, and we're just getting started. And we're bullish on the NASDAQ 100. And if I get a pullback, if I get some type of a pullback, I will pull the trigger on an indice myself. Okay. All right, guys. Let's go to Bitcoin, BTC, or we want to look at gold maybe. Somebody will say, well, they want to look at gold. My guys are trading gold. Gold's fast. Gold will take your head off, right? But look at gold. You go, gold. You go. So we got a 1 month. And there we go. So so now we have a bullish Harami. We have bearish candle for small body green candle. So this bear is going to give birth to a bull. So we look for a push up to the upside, back to the maybe 2072 area in gold, right, or beyond. Look for a daily and or weekly. Let's go to weekly. I don't know why the weekly is not there. It should be like side by side, right? Weekly. Maybe I can put a star by it. There we go. There we go. Daily, weekly, or weekly, daily. Higher high and higher low. We have higher lows. We haven't got a higher high yet, but you know, we've already like completed a downward cycle against the 200. We're above the 200. Very bullish, and bouncing off a trend line. That's also bullish. Go down to a 4-hour chart, and you know, you can drill down even farther. You know, drill down to a 5-minute. Drill down and look for support and resistance and pullbacks to get you that this razor entry with a little bit of risk, and you're looking at maybe retesting these old highs up here in the 1958.26. Okay. We also see the same thing in silver, XAGUSD, and we can see a nice bottom here on the. I'm going to back it out to our monthly. All right, back out. And you see again our Harami. We had a bearish candle with a baby. Baby is green. Gonna give birth to a bull. Surprise, surprise, surprise. We've been messing around in the anyway. So that's our monthly chart, dropping to a weekly, you know, and we have a higher low there. So we have a rising uptrend. Still need another candle for that weekly, daily, but there's our support, and we broke our downward trend line. We broke that pretty handily. So then come on back, come on up. The price is right. So backwards. Come on down. Come on up. Bouncing off the 200 moving average. We are bullish on gold. Yes, I mean silver. We are. The other shiny metal looking at $24 an ounce. Drop on down to a 4-hour chart, and there you go. Looks good. Looks good. A little bit of risk, small amount of risk, or a large amount of gain. There we go. Let's go ahead and look at the U.S. oil. U.S. oil, we can see oil, it spiked up. That it did. You know, we've got China online, big consumer, GDP expanding, and we can see that we had as the dollar. Remember, commodities are priced in dollars. So this is a dollar story. Dollars weakening, oil, weed, natural gas, copper, everything is going to go up, right? Because they're priced in US dollars. So that is just, pretty much of given. BTC USD. Again, who's going to be telling you? Who's going to tell you what I'm telling you? I'm dropping truth bombs all over the place. Boom, 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 boom. You know, it's World War III, and we are winning this game here. Interesting of Bitcoin, it is priced in US dollars. We have Harami, and we have like an evening star pattern, but I wouldn't be too surprised if we get some bullishness in Bitcoin and we actually see a retest of the old highs and maybe a breakout. Okay, so weekly, right? You can see that we are hanging at the 200. Didn't quite break below 2120. We need to break that. Right now, we're in one of those narrow range boxes of Toby Crable, and so we're looking at that. A breakout. Not sure where, but I'm thinking if the dollar is weakening, real simple for me to think that we would have I'm bulls versus bears. I'm bullish Bitcoin. just from the without even looking at the chart so much, just by looking at what's going on with the US dollar. And this is priced in dollars. It's like a commodity priced in dollars, right? We have a low, we have a low and a higher low, and we weren't able to retest that low or go lower. Just that little subtle buyback. I don't want to use this. I want to use this swing high, and this like it's sloping higher, right? And we have a sloping lower. So we do have a triangle of indecision. And we can see a break out of this. It would take us much higher. We go to a 4-hour chart and we can see if we get back to the old high of 25.28, that's a $3,000 move for Bitcoin, and your risk is relatively small right here. If you're risking your amount of risk for the amount of gain is not too shabby. Okay. Ether, I think, is doing the same thing. ETH/USD. Go back to our monthly chart, and we're it has a little bearish kind of like 3-candle pattern, kind of like a we call this evening star. But again, the dollar, is priced in dollars, so I've got this kind of flag pattern, kind of like, and we have a flagpole, and we can see some type of breakout above, see a breakout above 1742. Well, then we can see 2016, right? If we can break that, then, we've got all of that. And we have old supply zones right there, right? We have an old zone. That we can see prices moving into that. So bulls versus bears, I am constructively bullish on this, even though it's as long as we can stay above the 200. I mean, if we break out of this box south, I wouldn't be hanging around, but this is what we got going on here. We couldn't break 1471.12. Tried. So maybe it'll start heading back the other way, right? Okay, guys, and that's going to be it for me. I want to thank you so much for being with me, and I hope this was helpful. Let me know in the description below or the comments below that this was helpful. Give me a like, a thumbs up, a share. If you know someone that needs my help, let them know. There's a link to contact me to actually watch the 4 Pillars of 6 Figures. Watch that free masterclass, and if you would like my help in seeing if I'm able to help you become a professional trader in 90 days or less, well then click the link and book a time. Make sure you show up. We've been slammed with lots of interest. This is a record-setting year already. We're on track for a record-setting year. So make sure our time is valuable, and we don't want to waste your time. Don't waste our time. So only serious students should apply. We are selective. We are picky. But if you qualify and meet our, if you're coachable, we have programs that can help you. We can get you a 6-figure trading account with no money out of pocket, and also get you the trading that you need to manage that 6-figure account and help you pass your auditions for no money down if you have a 640 credit score and above. Okay, so again, that's it for me. Peace and pips. This is Dr. Greg McLeod signing out. I love you guys, and I wish you much success and happy trading. Cheers. Bye-bye.
saying at Elite Traders University, no trader left behind. You ever see those guys in the military, and they're carrying a wounded soldier? They don't leave. We're not leaving any soldiers behind, right? And we're not leaving any traders behind either. So when you come, one of the benefits of being part of this group is we're forming a family, a tribe of, because it's us versus the market makers and the big banks.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!